Good afternoon, everyone. It's Michelle Gazuli and Warren Federley coming to you on the eve of the Bank of Canada rate announcement tomorrow morning. We're coming to you live from MWah Mortgages, and we wanted to say hello and happy summer. It is finally summer. Praise,
feels good.
Praise, it feels so very good. So anyway, we're here the night before the Bank of Canada announcement. Our hope had been that we would have had another few recordings along the way, but we're harboring a little secret of something that the two of us are up to, which is taking up a whole lot of
our time.
All of our free time,
Yes.
of which we don't have much. But as a result, we haven't been able to film quite as much as we want, but our little secret is coming to an end, and we'll share the secret in the future. But for now, it's still the word. So anyway, on the eve of the Bank of Canada announcement date, our intent was to just say, no change to prime, cut, and be off. But we thought maybe we shouldn't do that, because as we were preparing for today, we realized there's so much mixed messaging out there.
Yeah.
Just the right hand saying something completely different than the left hand, that we thought we owed it to you to unpack that a little bit. And certainly before anybody starts drinking the Kool-Aid thinking that we are just gangbusters and the economy is roaring. So anyway, on that note, Warren, what happened last go round?
Surprise, surprise, no change to prime. I think it was widely believed that there would be no change, and I think it's going to be again the case for this announcement. No change to prime. Yay, variable rate mortgage holders. And I think we're really going to see that well into 2020, that no movement. And if we do see any kind of change, it'll likely be a cut to the rate, maybe even two, depending on what happens south of the border with the Fed. So yay on that front.
So while we're always talking about variable rates and are they going up and are they going down, I think it's important to mention that even though there's no change to prime, and even though we're anticipating that prime will come down in the future, right now fixed rates are where it's at. So for the first time in a long time, there's been a divergence between variable and fixed. Fixed today is looking pretty peppy.
Especially for insured business.
Yeah, there are some crazy rates out there, so really be careful what you're signing up for. A lot of lenders are introducing low rate products, but with highly restrictive covenants attached to them, which while you may think today this is a great deal, down the road it might not be such a great deal. So please be sure you know what you're signing into, and if you're not, then give us a call and we'll be happy to unravel it for you. But anyway, as we were preparing for today and saying, why is it that the Bank of Canada is saying, wow, things are great, and yet the bond traders are saying things aren't so great? And Warren, very astutely, and that's why I like to keep Warren with me, very astutely, Warren said, I think it's because the Feds and the Bank of Canada and all heads of banks worldwide are talking a lot about being data dependent, so making decisions based on data dependency. But data dependency in our world is always lagging data, so it's past data that they're making decisions on. So Warren said, I think the difference is Bank of Canada is relying and the Feds are relying on lagging data, and the bond market is relying on leading data, meaning what's current and what's today. So I think it's important that we differentiate between the two. So maybe, Warren, you can tell us why the Bank of Canada thinks Canada is in such great shape. What are the reasons for that? I mean, there are valid reasons why they're saying that.
Unemployment is a very important one. So unemployment numbers are very, very good right now. We said in our last update there were like 100,000 jobs added in the month of April, more in May. So unemployment is really low, which is good for the economy. In manufacturing, we have a surplus across the board. Business confidence seems to be really strong, again, looking at lagging indicators. Oil is stabilizing, they're saying. Not too sure I agree with that. Removal of steel tariffs recently.
Great news.
Absolutely. More stable housing. Depends on who you're asking, but ask us. And the USMCA will be ratified soon, we're hoping, or the
USMCA. Right? Is that what it is? USMCA? What
United States, Mexico, Canada Agreement.
Formerly known as?
NAFTA.
Correct.
Yeah. So, I mean, those are all lagging indicators that are pointing to, hey, things are looking a little bit better in the economy, so maybe we are looking better than we think. But we're looking at leading indicators for more predictive terms in terms of rates, and maybe you could talk about a little bit about those.
Right, so we were talking about rates, and rates being super fantastic today, and I mean really super fantastic. The bond market, which dictates where fixed rates should be, and the traders, not traders, have a completely different set of indicators that they're looking at, which are more current. So what are they looking at? They're looking at an inverted yield curve. We spoke about that last go round.
Yep.
So an inverted yield curve means that longer term rates are lower than short-term rates, suggesting that in the future things are not going to look so good.
Are going to look better. Short term, it doesn't look so good.
Short term, it doesn't look.
Yeah.
But there's a recession ahead, driving rates down. What else? They're saying that oil is shaky at best. I mean, no pipelines have been opened up. The Saudis are messing around again in the marketplace and sort of restricting countries with surplus reserves.
The Middle East in general, I mean, Iran.
Yeah, the Iran. So we have a looming potential war on the horizon. Not good. Middle East unrest. Not good. Trade tariffs. Oh my God! Every time Trump turns around, there's a new tariff. So recently, he threatened trades on Mexico, which puts that whole USMCA thing in question. He's also now threatening the Europeans with tariffs on car imports. In Canada, oh my gosh, because of Huawei,
Big telecom.
Yes, them. Canada is now suffering the burden of retaliation from China. So our pork and our canola industries, China is saying, too bad, so sad, Canada. So that's devastating for Canada.
Those sectors, yeah.
And never mind, we haven't yet even felt the impact of all the rate increases that were taken in the past. Right. So we told you again in the past, it takes 18 months for a prime rate change up to manifest itself in the economy. So going backwards, that means we're only going to feel what 18 months ago would put us to January 2018. So that increase hasn't yet trickled through the economy.
That's right. Another lagging indicator.
Right. Inflation is tame all the way around, so no real need to raise or decrease prime. World economy is slowing down. Brexit is still not resolved. In the U.S., 2020 is an election year, so an election year interest rates always stay low, always.
Gold is on a buy again.
Gold is on a buy, so there's something called a copper gold moniker.
Yeah, this is cool. Listen to this.
It's very cool. So the copper gold moniker suggests if you watch the prices of copper and gold, in times of recession, when the economy is not doing well, there's sell-off in copper. And that reason is because it affects everything, building, housing, all the things that would...
Because copper's in everything.
Right?
Okay,
Copper's in everything. So when times are bad, sell copper, because there isn't going to be a lot of growth.
And go to gold as a safe haven currency.
Correct. So if you look at that today, copper is on the downward trajectory and gold is on the upward trajectory.
Yay!
So another indication that things aren't that cozy. And last but not least, really, is business sentiment. Business sentiment around the world is down because nobody knows what the prediction of these trade wars are going to be. So,
I mean, let's face it, trade wars, like we were talking about the Cold War between U.S. and Russia of yore, the worry of trade war was to the tune of $2 billion annually. If you look at the trade between the U.S. economy and the Chinese economy, they're doing $2 billion a day. So the stakes are much higher in this economy because we're so much more globalized.
Imagine, oh my God, $2 billion a year, and we were worried, and now it's $2 billion a day. Yeah. Wow.
It's getting me to boat.
It looks like they're really using trade as a new
weapon.
Yeah,
it's a new weapon of choice between countries.
So it's influencing everything from immigration policy, which is why Trump said he was going to slap this tariff on Mexico so that they control the migration. It's being used for technology and intellectual property, so the whole Huawei thing is in there too. So these trade wars are really, really becoming a scary thing.
Yeah.
The reason really being, once they're imposed, they're very difficult to unwind. So once you have all the fine print and all the big documents saying thou shalt and this will be and I don't know what,
rolling that back is much more difficult.
And it just the devastation that it has on economies and businesses is just really mind-boggling.
Mm-hmm.
So on the U.S. side, it looks like the Feds are heading for cuts.
Yes.
Right?
Likely to.
Just the economy is not doing all as well as we thought.
Mm-hmm.
Housing is slowing, consumer sentiment is down, business sentiment is down.
Which will juice the stock market, which is exactly what Trump wants.
Right, no inflation on the horizon, so there's room to cut rates. So the bond market and the traders are effectively saying the Feds are going to have 2 rate cuts, and Powell has also indicated that that's where future rate indications are going.
Mm-hmm.
And as we know, if Big Brother cuts rates twice,
we're following too.
We will follow too. So I suspect that the Bank of Canada is going to do some
they'll take their time doing
chest pounding and say, we the North, we the North, we the North. But unfortunately, what's his name, we the North? Our big celebrity guy, the Raptors. Okay,
I don't know his name.
See, we haven't been watching TV. Yes, we do. Kawhi.
Oh, yes.
Kawhi.
The guy who likes craft dinner.
Right? Kawhi. So here we all thought he was going to be a sure-in, stay here, but what did he do?
He went to the Clippers.
Right? He went to the U.S., so that's sad news for us. But
follow baseball. It's much more fun.
Right? So bottom line, if the Feds are going to take cuts, we have no choice but to follow. When we follow, who knows? But we will have to follow suit with rate cuts. Otherwise, what's going to happen?
Our dollar will get too far out of mix with the U.S. and we won't be able to trade with them because our dollar will be
with them or anyone else.
That's
right?
true.
So it will destroy our economy if we don't follow suit. So even though Polutz may be pounding his chest and saying, we the North, it won't really matter we the North because it's going to matter who the South. Right? Mm-hmm. So that's what basically happened. Mm-hmm. So instead of, taking in everything that you're reading in the news as rah, good news, these mixed messages, you and I think we should change the mixed messages for mixed drinks on the patio.
Yes, patio season is here.
Right? Enjoy the summer months. Mm-hmm. So anyway, folks, that's our message for today. Anything else you want to add?
Congratulations to Lindsay and Todd Draper on their new arrival. Clients of mine really excited for them. They're having a baby. Anyway,
Yay.
Plug.
Anyway, so thank you all for listening. Thank you all for being our clients. Mm-hmm. Enjoy your summer. Have a few mixed drinks on the patio. And for now, we're going to say what?
Mwah.
Bye, everyone.
Bye.